Hi, welcome to EQSIS Financial Services, and we appreciate your interest in learning stock trading and analysis. In the next few minutes, we're gonna discuss about the interesting, candlesticks pattern called piercing pattern. Okay, this is followed by the engulfing pattern. Okay, if you should have some basic idea about the demand and supply to study this. So we generally recommend people to understand, the trade with knowledge and discipline that should ensure that they will be making money in markets. Okay, now it's piercing pattern. See, it appears very rarely, but it indicates the trend reversal. It indicates the chances of reversing trend is quite high because it rejects the bottoms and top. There's a sign of tops and bottom rejections. Okay, and it is a reversal pattern. As I said, if you find this bottom in the if you find this pattern in the bottom, then you expect the price to go positively and the prior trend should be negative. Okay, this is not a continuation pattern. Again, we say it is a reversal pattern, and there are some criteria ensure that it is a proper piercing pattern. And if you look at this, the latest, the green body should cover the previous day's low. That's where you find the difference from the engulfing pattern. Whereas the engulfing pattern is concerned, it has to cover the body alone, but most of the people follow the piercing pattern. It's because this managed to cover the low of the previous day. It means the gap down opening has been witnessed at the early stage of the trend, and the bull body should cover at least 50% of the previous day's candle. That should ensure that the rally is significant enough to cover at least 50% of the day, and the upper tail should be small in size, is to ensure that, okay, if there is a big upper tail is there, that shows the selling pressure. And today I'm not able to close the complete body. It's because I don't find time. If I find time, probably I can close it, but in that case the volume should be, the upper tail should be small in size, and generally you see more volume would take place at the the piercing day. So we see how it is actually happening in real life. Now as I open the charts, the prices are coming down. The next day the prices are moving up, followed by that the prices are coming down. Once again the prices are coming down. This shows that the recent price fall is happening here. And suddenly what happens today, the price opens significantly lower. It means a gap down opening witnessed, that by the time the sentiment was completely weak, and it managed to recover significantly because it managed to cover the 50% of the previous day. This is a 50% mark, assume, roughly around, but this day it closed above the 50% mark, and the upper tail is not very big. It's quite manageable. This is tolerant. We can actually tolerate this much size as far as the piercing pattern is concerned. So all these conditions met as per the piercing pattern. So now we have to decide the direction. The direction is pretty sure. That's a trend reversal is expected because there's a sign of buying happening from the bottom, and we expect the price to go up. It means we can go and buy the stock if the price goes above the highest of last 2 days, which is, say, this is the most recent price action I have, and this is the prior day. If I see highest of those two highs taken out by the next day, then I go and buy the stock, and I keep the stop loss, which is the lowest of those two, with generally the previous day low when it comes to the piercing pattern. And we should expect the target of the risk whatever we have taken. So the A to B is the risk we are taking, am I right? And we are buying a stock at the rate A and we are placing the stop loss at the rate of B. It means we expect the target should be this much. Okay, we assume that to understand these things you should have some basic knowledge about the demand and supply. We are using a lot of terms like stop loss, entries. If you don't understand, it's better you search, Google it, and probably you can look at the previous videos which we have uploaded, and then probably you can get back, because the primary objective of these videos is to recollect the program, and it's time to think, what exactly happened in a workshop. And if you are completely new to us, then probably you Google it, somehow you understand the terms, and watch this video once, twice, thrice, probably you get to know the logic behind the screen. Okay, what next after completing the program? And now it's time to learn the interesting concept called doji. Doji looks very small, it's very powerful. Okay, and if you find this video is very useful, we request you to share this or like it in your social network, so that it encourages us, and it encourages us to reach more number of people as well. And if you have any viewpoints to add, probably you can add your viewpoints, you can add it in the below comment box. Thank you. Happy trading.